had the great pleasure to talking to Julie Picone, who's a loan officer of 10 years standing with HSBC Mortgage in Northern New York. Julie, I always start off the interview with everybody. Before we get into your professional career, if you might tell us a little bit about yourself and where you come from and your market area and how you got into the business. And by the way, before we even start, how many loans did you do in '99?
Roughly about 250 loans.
Okay, a lot of loans. Okay, how about a little background on yourself?
Sure.
Don't need to know your age or anything.
Okay, no, that's
where
okay.
you came from, what you did.
At this point, I'm happy to share that number.
Yeah.
But I am from Western New York. I grew up in Western New York. I was educated at the State University of New York at Plattsburgh, where I obtained a 4-year bachelor's degree in business marketing. And I did that because I really did not know what I wanted to pursue during that 4 years of education, but I knew regardless of what I did, whether I went on to medical school or anything, that I would need a business background. So that was my intention, and I thought, well, maybe I'd go on for my master's, and that hasn't happened yet. But when I got home, actually after I graduated school, I had moved to Georgetown in Washington, D.C. for 3 months and spent my life earnings that my parents had saved for me.
I was born and raised there.
Pardon?
I was born and raised there.
Oh,
in fact,
really?
I grew up next to Jack Kennedy's house, on N Street.
It was a great area. Really, it was a wonderful, wonderful time that I will never forget, but unfortunately it was short-lived because the standard of living there was much different than Western New York and what I was probably accustomed to on a college salary at that point. So after I ran out of all my savings from my communion money that had been saved, I moved back to Buffalo and just started generating resumes in every line of business marketing that I could find. And just through word of mouth from a friend of the family who owned a company called Spectrum Home Mortgage at the time, knew my family well, was my grandfather's banker for many years, told me what he did and that there was a position available and was I interested. And I was definitely very green and very interested at that point. Nor do I think I could even probably spell the word mortgage at that point, but I went with it. And I said, I'll just take this one day at a time and see where it brings me. And here I am 10 years later working for the same person. The Spectrum Home Mortgage, the first mortgage company that I worked for, was fantastic. It was a great experience. I'm still working with all the majorly same coworkers here at HSBC because in 1994 we were acquired by HSBC, which at that time was Marie Midland Mortgage Corp.
Oh, sure.
And we had a business relationship with Spectrum because they were our warehouse line, so we were, kind of familiar with them at the time too. So it was a really nice marriage, and it worked out really well, and it was kind of common sense when it happened. But when it was Spectrum, we were the #1 mortgage bank in Western New York, but that's all, in terms of a bank, that's all that we did was mortgages. There was no checking or savings or anything further at that point. So we knew coming in 1994 and where the business was heading at that point that we really needed to move on and become a full-service lender because there were so many other cross-sell opportunities with investments and checking and savings, and it worked out really well when Marie Midland had approached Dave and Bob, the people that had owned Spectrum Home Mortgage.
Was your old bank originating primarily for their own portfolio, or were they taking stuff out the back door to Freddie and Fannie?
Everything was out the back door to Fannie and Freddie. There was no portfolio lending at all.
I see.
So it was a whole new world when there was a lot of resistance from a lot of people to change, as there normally is, when we went over to Marie Midland Mortgage Corporation, but then we realized what we were missing and how much more you could do and how sometimes you could, when you had a banking relationship with somebody that maybe did have their commercial accounts and personal accounts, and how you could kind of help them in special ways that we didn't have that flexibility before. Those were the loans that we knew we were going to lose. Where now it opened up a whole new opportunity for loans that we were going to keep and originate, and all the hard work that we had put in, that the people would come and apply with us, so we didn't have to worry about losing that loan.
I'd like to bounce back a little bit to some of your early days. This is a standard, not too many standard questions, but there are always a couple I think that everybody has interest in, especially branch and regional managers when they hear this. with the totality of the interviews that they'll be listening to. And that is, when you came into the business, I'd like for you to tell me about the training you had. And that ranges anywhere on the continuum with people to virtually non-existent to a pretty full force. And, how did you, what was your training? How long did it take? And what happened in your first 4 or 5 months out in the field?
Okay. Well, as far as the training, it's a very short answer. It was non-existent. It was kind of fend for yourself at that point. The manager that they had put me under had been in the field a long time, but he also was in it long enough that he had a lot of bad habits and just, I think, had lost the determination. I was working under somebody who was maybe on his way out of what he was doing, and I was on the way in, so he didn't have the determination and the motivation that I had at that point to lead me. And one of the first things they did when they started, I went in, I had an interview, they said, "Congratulations, you have the job," and I left with the Fannie and Freddie and FHA manuals. And I sat at home and I cried because I was reading these manuals, and it was telling me, the first sentence was said LTV. Now, how was I going to get through that entire book without even somebody telling me what LTV meant? So I went through them, but I know that I comprehended nothing after I went through them. So go ahead.
No, I was just going to say, I have to tell you this. You can't see them, we can't see them, but there are a lot of people laughing out there with this last week, and there's a good chunk of them that are shaking their head up and down. Continue.
That was my first question, though. I went in to Mike Grimaldi, who was my manager at that time. I said, "Mike, what's LTV?" And I knew right there that I had a lot ahead of me to learn. So at that point, all my training, I decided was going to be on the job, and I was going to have to learn from a lot of mistakes. And that's exactly what happened. I tried to take as much phone time as I could at that point, only because I was going to probably be the least busy person with appointments. I just tried to visit as many realtors as I could. I sat on many applications of my coworkers at that time just to hear how they handled themselves in an interview, what type of information you need to gather from the client. So that was my training program. And I am very sensitive to anybody new coming into the business because I have vivid memories of how awful it was in the beginning, being totally green to what I was doing at that point. Nor did I probably see a very long future, but at this point I definitely do. So that's always one of the things that I've been very adamant about throughout my career at HSBC is training and just keeping on that. And training is definitely a constant thing because our business, as you know, is changing on a minute-by-minute basis. So
do you think there's a place? The obvious answer is going to be yes. But I'm really looking to dig a little bit deeper. But what do you think executives out there that are listening to this, particularly regionals and above, when it comes to training and setting up training programs for new people? And to be fair to them, there's a couple schools of thought that maybe it's not so bad sometimes to throw you to the vultures and see who comes to the top. So there are a couple different schools, but I'd kind of like to get your comments.
Well, I think training is extremely important, but all that you can really train somebody is the basics. Because the guidelines are changing constantly, that is your best training is going to be on the job. So I think sitting with people, watching them, the successful people, what they do, is going to be the best training. You can explain to somebody the basics of what, LTV requirements are for certain types of loans, just the ins and outs of a conventional versus an FHA versus a Sunny Mae, which is something unique to New York. It's a state of New York mortgage agency. You can teach them the basics, but you really do have to throw them out to the vultures, maybe not by themselves, but if you have a short period of time where they accompany somebody that's a more senior person and just watch how they handle themselves. Especially if you have somebody new that's green to all of it, you're teaching them everything for the first time, and you don't want them to acquire any bad habits themselves.
Hey, having said that, though, I think there's a case to be made also for a middle ground where what you say may have some validity. You would definitely get an argument on that from a group of our listeners out there, and some would applaud you. But I think there's also a middle ground that most people, whatever spectrum they're on, would agree with, that you do need some sort of a form of continuous education. Now,
definitely.
whether that's from a branch manager holding weekly meetings tapes to inviting people in or whatever, you need to use those skills. And as proof of that, you can take something that's not even related to the mortgage industry.
Right.
Zig Ziglar comes to mind, and
right.
every year they tromp him out and roll him around the country. They're going to have to preserve the guy pretty soon. He's getting up there. But they pack these things with 25, 30, 40,000 people, people that come out, pay 50, 75 bucks just to get their jolt of reality again.
Exactly. No doubt about that. Constant training is definitely very important. What we do here at our organization is we have a sales meeting with all of our loan originators once a month, and as a part of that sales meeting, there's always about an hour that is dedicated to some form of training, whether it be updates on FHA, whether it be an attorney coming in and telling us about changes, whether it be an appraiser coming in, updating us on changes. But we do definitely have that constant training here at our organization, and if we didn't, I know that I would seek it myself, because I know I don't know everything, and I know things are changing constantly, and I have to keep myself up on that.
Let me ask you something. In the early days of your business, how did you go about and get your business? The obvious overall answer is, I'm going to guess, probably going after realtors, but perhaps going a little deeper in how you did it and what you encountered. And I say this because there's a lot of listeners here, loan officers who are new, that are going to be hanging on to every word.
Sure. I just did the basic stuff. I went out and I visited realtors. I visited attorneys that I knew, anybody that was related to the real estate field. It was hard also because I went into an organization where the people that had been originating had been there a long time, and they had not seen a new face in quite a few years. So they all had their niche offices that they worked with, and I had available, one in one town, one in a town 5 miles away, one in another town 10 miles away. So my offices were not concentrated, to one geographic area. They were kind of all over Western New York. So I just spent my time going in almost on a daily basis. I knew that I needed to be in their face. If they weren't going to know who I was if I sat and waited for the phone to ring. So what I did, and I got a lot of laughs for this, but I did this and it worked. And it's very simple. But I went to Sam's Club. I think you have those probably down in your area.
Yeah, we do.
Okay, or BJ's, and I would pull up. I would lift up my trunk and I would buy $200 worth of candy, cookies, anything that somebody would want to eat. And I kept that in my trunk, and no matter where I went, I always brought something in with me, because I knew that even if I was going to a realtor where maybe they had their own broker company that they owned, so they weren't too happy to see me, they'd sure be happy to see me if I had some cookies or candy or something under my arm. So that got me into a lot of offices that otherwise, you've got other originators you're bumping into, and they're putting the old rate sheets in there and, whatever information they have in the mail slots, and they walk out the door. But no, I always left something next to their kitchen sink or whatever, and everybody walked over there and nibbled on it, or they came over when I was there and enjoyed some of it, and that just worked. They called me the cookie lady, but it worked. And I did that probably for 3 years, and then I just got, the refi boom had set in, and I got so busy and I got away from that. And I could see how things slowed down, or the calls maybe started slowing down a little from the realtors, because everybody was concentrating. All you had to have was a phone at that point, and would ring, and the refi applications were just the volume was so heavy at that point. So now I'm trying to get back to the basics, and I'm revisiting what got me to where I am 10 years later. So I've been starting to do that again lately.
What about discussing how you stopped doing that? I find that interesting because, there are times when the volume comes in where you're overwhelmed.
Right.
The money's easy, but it's also kind of easy to lose focus that, where good times come in, good times go out, but you need to focus on your core constituency if you want to be around for the long haul.
Right. You have to definitely always keep in the back of your head on a daily basis what got you to where you are, and constant revisit that. But I don't want to say that I didn't necessarily stop it, but I don't visit BJ's or Sam's Club anymore, but I'll always make sure, as best I can, to bring something, whether it be driving into a donut store on the way there or whatever it might be, grabbing some movie tickets for something, whatever it might be. I always make sure that I've got a little something, besides just the normal stuff. And I realize it can get quite expensive sometimes. However, if you look at where where if I at least look at where it brought me, the payback, was tenfold. And it was very minimal cost for
Sure.
what I did at that point and what I got in return.
$300 to buy a lot of cookies.
Definitely. Especially if you have some coupons or something.
Yeah, right.
I would go to the grocery store and, sometimes they'd have 2 for 1 or whatever, and that would be the one I'd stack up on.
Sure. Mm-hmm.
So I tried to get the most bang for my buck.
And it's a tax write-off, too, if you
Yes,
kept your
it
receipt.
definitely is.
Hope you were smart enough to remember that early on. People in our business write off everything but the air, and sometimes we even try and do that. But, gross doesn't equal net. I find there's value out there for the young people getting into business in what you say, because it's the totality of the interviews. As people listen to the different interviews, a lot of the same things come washing over in a little bit different form. But it's what I like to tell our listeners out there. It's like going to a restaurant and you have a really bad dinner, and you're talking to a group of people, and you made up your mind pretty much that you're not going back. And all of a sudden you start talking to some people, and they said, man, we had a really good dinner there. And after you talk to a number of them, you kind of get the feeling, well, geez, maybe the chef had an off night, maybe something was bad, but there's a lot of people out there that like this restaurant. I'm going to go back. I'm going to give it another shot. And so in kind of a reverse way, the comments that the listeners hear out there, if they hear the same things over and over, it's not that the interview is boring. The reality of it is, for those that are sharp enough to pick it up, is that there's valuable insights that are coming in over and over and over again. The basics. I mean, one of the reasons Zig Ziglar, besides the fact that he's, really good and he's got a wonderful voice and he's got a wonderful delivery, he goes over basics time and time again. Right. I'm willing to bet that his speech, or his core speech, has probably not changed very much in the last 25 years.
Right.
And yet we all kind of forget about that kind of stuff. Bringing, in all honesty, it's not a major surprise when you tell me that you bring cookies and donuts and stuff out there, because, I hear it constantly, not always, but I do hear it constantly. But the fact of the matter is every time you hear that comment, and this is directed to the listeners out there, there is validity being established with that point. And the point of it is that the damn thing works.
Right.
And that's what it's all about.
Right.
It's so hard. I mean, I went through it. Everybody goes through it. It is so hard when you start in this business, going into those offices, and it is a rejection business. It's not a personal rejection, which makes it a lot easier, but it's a rejection business nonetheless. And it's so hard when you go into those offices starting off. So, and it's very discouraging, and a lot of people get out of the business who really shouldn't, would be very successful. But they do. And so they need all the tricks in the book to get in. Right. And I think some of the points that you've made, make it very well, really. Let's move on a little bit. When did you first realize that, you were going to make a go out of it, that this was paying off financially, and that you kind of had reached the point where you felt comfortable?
I think it was probably after maybe the second year of originating.
Mm-hmm.
The first 2 years I had originated at a level that was acceptable for a living and being new in the business, and I think I met the goals that I set for myself, but I think it was really after 2 years that I knew this was a real career that I could stick with, that I was comfortable with, and that I knew that I could be successful with, as long as I continued to do the things that got me at that point. So your point is very valid in stating, some people may not give it long enough and should stay in it, that maybe get out of it too quickly because it's discouraging. But maybe to hear that I said it took 2 years till I felt really comfortable. I realize it's hard sometimes that, it's a commission-type basis job, and it's hard to sometimes live that way. But especially a younger person, you're probably, only dependent upon yourself, and it's probably the best position to be in at that point for that type of earning. But give yourself at least a good 18 months, before you're going to consider even giving up at that point.
Mm-hmm. Yeah, I think at the end, I think there does come a point in this business, and I happen to agree with you that I might move the date back a little bit myself to 12 months to 18 months, but it's usually in that period where I think you're either going to make it or you're not going to make
right.
it.
I think after 2 years has gone by, you can probably make a pretty good assumption at that point.
Right,
but
exactly.
If you're going to start originating and then all of a sudden think within 3 to 6 months that I'm on a roll and this is all set, you don't know what time market you're coming into. You don't know what the circumstances are at that time. Mm-hmm. You haven't gone through the ups and downs yet. I've come full circle, I think, like 3 different times now that I've been doing this 10 years to see where the ups and the downs are, and when the people that I work with that are newer come to me and, act that they're scared, you have to explain to them there is no reason to be, because in a few months from now you're going to be coming to me telling me you don't have enough time to handle what you have right now.
Right.
So take the time right now to gather what you can, to prepare yourself for those months, and make sure that you're still in these people's face, even though you might visit an office and they might not have a deal to give you right now. The more you're there, the next time they'll remember you when they do.
Moving this up a little bit to the present time, where do you get your business? Could you segment that percentage-wise for me?
Sure. I would say it's probably 80% realtors, and then it's the old 80-20 rule, but it's probably about 80% realtors, and the other 20% is probably past customers or referrals from family and friends. Mm-hmm. There's some financial advisors that I work with, and there's some attorneys that I work with as well that will refer me business.
That's interesting. You are a little bit different after that period of time of having so much business still with realtors. I find that interesting. I'm not saying that positive or negative. I just find that interesting. And that means to me that you do focus most of your energies in maintaining those realtor relationships, which leads me in turn to ask you, the realtor offices that you started off with, let's say in your second year and let's say in your 7th year and then today, are they the same realtor offices? Have they
one is the same.
Grown, expanded, so only one remains?
Only one is the same, and that's not because I've dropped them. It's because in the past few years there have been some merging of different real estate companies in this area. So one office, it's just a little different because they merged with another office. One is closed altogether. So one is the exact same as it was, 7 years ago, but the other ones are people that have been in the business a while, but no, they were not offices that I was working with at that point.
How many offices in toto do you call on today? And then how about breaking that, the old 80-20 rule? How many do you think you're... And I don't need to know names. As a matter of fact, I caution everybody on these tapes that we're not looking for anything that's proprietary to your company.
Sure.
So, but with that in mind, how about giving me some numbers as far as how many you cover? And once again, where I'm coming from is for the listeners out there on how many offices in general people can handle it and how you focus your energies. Okay.
Well, the first thing I want to clarify, when I told you that 80% was generated from realtors, I'm referring to purchase business. Mm-hmm. Because refi business is never really consistent, but that's what I was referring to as the bread and butter of purchase business. We also will get referrals from our branches as well, so that plays a little into the 20% part. As far as the real estate business, there are only 5 offices that I count on, or call on rather. And out of those 5 offices, I would say probably 3 of them provide the 80% of my realtor business. Mm-hmm. There's one that I primarily get all of their business unless I tell them I cannot help your customer, I don't want to waste anybody's time, and send them on to a referral of who can help them. But there are some offices, there's 2 offices in particular that are real estate companies that own their own mortgage brokers. So I get a lot of resistance there. The manager of that office is kind of very aloof when I go in. They're afraid the wrong person might see me talking to them. They don't attend any luncheons or anything that I would put on for the agents, but, she will tell me when nobody's around, I know that you do a good job for our agents, continue trying to work on them, but just realize that I'm not going to have a relationship with you because I have an allegiance to our company here.
Mm-hmm. Right. There's a theory, I have some very strong theories about that. And as I say, normally I say I don't like to inject myself, but I end up doing it anyway. I feel qualified to do it, though, fortunately. And that is, I have some feelings when it comes to those type of companies in general. And that is that my personal feeling is, for anyone that cares to listen to it, a realtor or a mortgage banker, is that the realtor who does that and is pushing their mortgage subsidiary, I think is doing a disservice to their clients. And ultimately, your client is who pays your fee, who you have a fiduciary relationship to. And when you push your own company to the exclusion of others, I think you're doing a great disservice. I think I could make a case that it's, depending on the level of it, it's actually illegal and unethical. And I feel very strongly that those type of companies that really go overboard, they need to be challenged up in your face on it.
It needs to be limited. I'm sorry to interrupt you.
No, that's fine. No, I want you to. I got to stop.
Limited more to individuals than maybe so much the way that I want to say the company feels rather than some individuals, because the realtors are, of course, self-employed, so you're working with them individually. But the point that I wanted to say just escaped me, so keep talking.
Oh, that's okay. Basically, we're talking...
Oh, I remember what I wanted to tell you. What I talk to the agents about when I run into that situation, because I know there's resistance already, and I'm probably on the defense right away, but what I tell them is, number one, I'm not coming here to ask for your business. I'm not saying, please, I give business to Julie. I'm saying, please give Julie the opportunity to earn it herself. And you need to give your client the opportunity to make an educated choice on themselves, because people are becoming very more educated as time goes by to make these choices, and not so much, well, our realtor told us to go with her, and that's who we're going to choose. But to say, listen, here's a couple cards of who I work with. I would prefer that maybe you use this company because our real estate company is associated with them. But it's your choice, especially what if something goes wrong in the whole financing scenario? As a realtor, I don't think you want your customer coming back to you, because now you're putting representation out there that you kind of represent the financing part of it as well. And if something goes wrong, they're going to say to you, the customer is going to point their finger and say, you told me to go there.
Well, now
you told me to do that. So put the onus back on the customer and let them make the educated choice, and let them go with who they're comfortable with.
Well, now you have come to the legal crux of the issue. We've talked about the moral and ethical position, but you have hit the nail on the head, because companies, realtor companies in particular, they're leaving themselves vulnerable to either a class action at some point in a worst-case scenario, but to individual cases where you're exactly right. Things go wrong in this business because that's kind of the way our business is. There's so many pieces of the puzzle to put together.
Surprises that come up.
And that's right. And because of that, it is imperative, and realtors will probably never listen to these tapes, but it is imperative that realtors be able to give people the opportunity, as you say, for an informed choice.
Right.
I don't know if you can hear that, but that's a jet pilot that came with about 30 feet of my house. I'm on the waterfront down in the Lower Eastern Shore of Maryland, and they do a lot of pilot training exercises. I don't know where they come from. Anyway, that's okay.
See, I have nothing bad to say about brokers. First of all, that's part of our business as a bank. They need to have their loans funded. We provide that funding to them. So, in some respect, they're our business. In other respects, when I'm out on the street, they're my competition. But they're also out there doing the exact same thing that I'm doing or trying to achieve. So I'm not, downgrading, well, don't go to a broker because of this. I'm just saying, have the customer, from a realtor perspective, make that choice on their own. Don't make that choice for them.
Mm-hmm. Do you find there's an audience for that? When you tell people that, do they listen to it, or does it kind of roll off their back?
No, I would definitely say that they listen, especially if you give them the scenario of, what if there's a problem? Do you want to be responsible for something that you're really not in control of? So I don't think that they would be. What their professional job is to take care of the real estate transaction and help negotiate the contracts and everything to do with that property, but it's not to control the financing. It's not to take care of what the attorneys are responsible for. So let the professionals do their job. And, they can go as so far as, who to suggest or strongly suggest, but ultimately it's the customer that's paying that mortgage payment, not the realtor or not whomever, referred them there. So that's always, I think, important to keep in their mind.
Yeah. I know one of the things may be a comment here, an acknowledgement. I know when I was on the street many years ago, I used to, when they were starting to get into, give the three names, before they didn't do that. And that is, I would just say, look, give the three names out. Just have, all I want's the first call. And that's all you wanted was that first opportunity.
Right. Yeah, just make sure mine's the first card.
Yeah, right, exactly.
Right.
Exactly. What kind of, to jump a little bit, what kind of business do you do? I know you do an enormous amount of loans, so I know you're pretty busy. Do you do a lot of VA, FHAs up there, or conventional? How do you break it down?
We're generally, as an organization, we're about 60-40, 60 conventional, 40% government.
And what about splitting that government up?
Government, I'd say, is probably 90% FHA. And then it also, I'm talking about Western New York, so it's probably different in different geographic areas. Plus, as part of our government mix, we have something in the state of New York called Sunny Mae, as I mentioned before, the state of New York mortgage agency that makes loans available to first-time home buyers, which is unique to the state of New York. So we have that in our mix, and we also, as a portfolio loan, have an affordable housing product that is extremely popular right now, so that makes up a good portion of our conventional financing as well. But from a personal standpoint, I would probably say it's maybe 70% FHA, or I'm sorry, conventional, and maybe 30% government.
Is that stuff going to Freddie or Fannie, or because in Virginia, there's a lot of states have their own program. Virginia's is called VHDA for first-time home buyers. Do you do a lot of that yourself?
You mean as compared to like the Sunny Mae?
Well, any kind of different niche product from the government.
Just at this point in time, the product that we have, like from our state government, the Sunny Mae product, is priced exactly like one of our affordable housing programs that we have in portfolio at this point in time, coincidentally. So personally, I always choose the portfolfro product.
Of course.
Because it's, it's right here. I don't have to deal with the state of New York.
Plus you get CRA credit, too.
Exactly. But from time to time, the state will sell bonds and raise money to offer a specific mortgage program that they only allocate a certain dollar amount to, and it's something that nobody can come close to. So, there are times throughout the year where you'll see a heavier presence of Sunny Mae loans than any other type of loan. Government mix.
I'd like to switch and kind of bore in a little bit. How do you deal with your realtors on a day-to-day basis? By that I mean, do you get out there a lot? Do you take rate sheets? Do you have any doodah trinkets? What kind of tricks do you use? Perhaps not the right word, but what do you use to get new realtors and maintain the ones you have? Besides doing a good job on your loans, but it goes with the territory.
Well, I think as far as new agents are concerned, just making yourself available to them and trying to offer them a little training, because they've been trained in real estate and how the real estate transaction proceeds, but they probably haven't been given much training on the financing part of it.
And would you go into that in detail, please?
Sure.
What do you do?
It's mostly a one-on-one thing. If I need to go to an office and, there's something that I want to express to the entire group, then we'll set up a meeting. But, what I would do is maybe invite that realtor out to lunch and have a very informal, comfortable type of setting, and see what their interests are, talk to them, but also express to them, how you can help them, what you're here for. I'm not just here to take a mortgage application. And this, I guess, would apply to any realtor, maybe not just a new one, but explain that you're there also maybe to answer questions that, that they might have before they meet a borrower, or, they're unsure of something that they can come to you no matter what. Even if they're not sure that you're the person to ask for, call me, and at least I'll guide you in the right direction. But I can be a medium for you, at least, to help you find where you need to go.
Mm-hmm.
So, let them know that you're more there than just qualifying and taking applications.
So if I can interpret this, interpret the obvious, getting a lot of FaceTime counts in this business, even after all your years.
Right, just be in front of them, because I'm not the only one that's in front of them. I walk out that door, another one walks in. What am I going to do that's going to make them remember me? And that is going to be a consistent presence, not just going and dropping off rate sheets, because your rate sheet is going to be covered up by the next person that comes in the door.
Do you use rate sheets?
Yes, but I do not leave them at realtor offices. I generally have either a fax that I will take them to, or, if I need to update them on rates, I will use voicemail a lot too. Some people don't like voicemail that much. I think it's a great thing. A lot of people are busy. You just want to get some information to them. You don't want to bother them in what they might be doing. Just drop them a line. Hey, I just had a call from so-and-so. I just want to let you know this, and oh, by the way, the rate went down, so if you have any new buyers, let them know that we just had a rate change.
Do you use email at all, yourself or with clients?
Not currently.
Mm-hmm. You think that's a future medium?
Pardon?
You think that's a future medium?
Definitely. Yes, I do. But because of my limited exposure to it right now, we are on our way to being on that type of system, but as a company, we're not as a whole right now. But it's in our definite near future. But as I explained, we're going through an acquisition, and it kind of had prolonged some of our plans into the information technology part of it.
Mm-hmm. Well, of course, you could always get a laptop. Not to lecture you. You don't need a lecture from me, but you could always get a laptop and do it yourself.
I know.
But that's what everybody uses a different methodology. But I do agree with you that and of course I'm a little bit on the technology side today, but the email, which I only started using less than a year ago, to any degree. I've now reached a point where I am so busy that if I didn't have email, it couldn't survive. Right. Couldn't survive.
We have, I should correct, we don't have we have internal email. I can communicate with anybody within the organization on my computer, so I use that very often. Especially if I need to reach a processor or underwriter, I don't want to take up their time on the phone. I just need something answered very quickly. Mm-hmm. So I think it is an amazing form of technology that's been utilized.
I want to cover an area that I rarely cover, and it's primarily it's a time issue. So I can't unfortunately ask everybody, but I'd like for you to get into an area that I rarely cover. And that is, and I should preface the remarks, the reason I'm asking this is that you do, a staggering amount of loans, and talk about your, without being, company specific, so to speak, if you know where I'm coming from, talk about your processors, the relationships. Do you have people helping you, underwriters? How about the flow? And how important that is to you.
It's extreme.
Once again, without divulging any, company.
Sure. No, I understand. The relationship in general that a loan officer has with processors and underwriters is just as important as the one that they have with where the business is coming from, because the work that they generate, the commitment letters, the calls that might come in from your clients or the realtors, if they can't reach you, if they have another name, they're going to call that other name. So the relationship that you portray to them is extremely important, because they are also going to be a reflection of your work. Sometimes I will suggest that a borrower call the underwriter directly, and that's because I have confidence that that person has good telephone skills and they will know how to explain it to the borrower. But they are going to be a direct representation of you. And also, internally when you're working, personalities, you just need to be on a great basis with them in terms of, when you need favors. Everybody needs favors from time to time, and, you want them to know that you're here to take favors, but you're also there to give them, whatever help they can give. I'll have processors that say, well, Julie, why are you the only one that will send out the FHA forms or do this or do that, and nobody else does that? And I said, well, I'm just trying to make your job a little easier. I know you've got other files to do. I'm filling out the papers anyhow for the application, so why can't I just fill out an envelope and mail it to them? And they're like, that's so great. If you could share that with somebody else, it would, save us a lot of time of having to mail out the option clause or whatever might have not been signed at application. Just little there, and it's common sense. I'm not telling anything new to anybody. It is just the most basic common sense things that you just have to keep in the back of your mind.
Do you think a lot of loan officers kind of forget that you're really dealing with another side in this business? It's one thing to get out there and get that loan, but you sure as hell got to get that thing through.
Right.
And part of that is in relationships with the people that you work with, and understanding in this definitely understanding this business that not all processors are great. Sometimes you get a lot of turnover. Things happen in business. They don't make as much money as loan officers do, and because of that, and the fact that they're under a lot of pressure, there's a lot of turnover in those areas at times. So relationships, and by that I mean your relationship with your processor and the people, becomes important to them.
Right. Well, definitely. And there's always been a little, opposite side of the fence of the operations versus the loan originators. And I won't say so much in our organization, but I do see people encounter it, that you're on different sides of the fence and you're not working together. The operations always thinks that the loan officer is trying to pull their wool over their eyes, or this loan can't be that good. You're not disclosing information, and as a loan officer you're thinking, well, these people are just conditioning for way too much. We don't need any of that. But if you try to have the understanding that you're all there working together, I have a job because I've got somebody to process my loan. They have a job because they have a loan officer that's bringing in applications. So everybody is there, for the common good of the group.
Well, beyond the common good, and there's a theory, it almost sounds communistic, which reminds me there's a theory that communism actually can be a great and wonderful thing, to each according to his needs, blah, blah, blah. Of course, the theory breaks down that only the Jesuits can pull it off, and even then they need small groups. So in practice, of course, it doesn't work. But I do think in terms of working with a group, it is important on that side of the fence. And with that in mind, do you do anything specific besides filling out a couple forms with your processors and underwriters? Do you make a point for that, just to give you a little prompt of, keeping in touch and remembering birthdays and things? Anything you want to tell me that might help the others out there?
There's nothing that I do on a consistent basis. I guess it's maybe just always keeping them informed on, things that I've talked about with the customer, so they know when they get a call, they'll be aware of what I already discussed with them. But I mean, if you do know that their birthday's coming, or if you do know of something special in your life, you learn to know who has kids and who's married, when their anniversary might be. You might remember these things just from being associated with them for a certain period of time. I always ask them, gee, how's your husband doing? Or, how's your 2-year-old? So, just like any personal relationship, being genuinely concerned about somebody rather than just asking the questions to make small talk. So let them know that I am your equal. A lot of the processors, we all know that there can be a huge pay difference between what a processor makes and what an originator makes.
Good point.
They're always looking like, well, what do you care? You're making X amount of dollars, and I'm just the person that sits here from 8 to 5 and shuffles papers and answers the phone. Well, I don't care what their earnings are. They are an equal person to me. They go through the same rituals in life. They have the same experiences, regardless of what their income is. And I want them to know that. I do see loan officers that come in and feel, well, I make X amount of dollars, I'm high and mighty, you will take care of this paperwork because you're working for me. It's not the way it is at all, and that's not the way to act.
I got a little story.
Okay.
You should interject a story. This is kind of a clever story that will certainly illustrate that point. Many years ago, I was... I don't know if it was a regional manager, may have been a branch manager then, I'm not sure. It's a long time ago, more years than I'll admit. And we were in a monstrous refi boom, and I had set up kind of a little shop and where we were acting as kind of a mini wholesaler, and it was actually quite successful. Kind of did it on my own, and it turned into a rousing success. And we had a company, a small company. They're out of business now. They call it S&L, S&L Mortgage in the Washington area. And they were just swamped with loans. And one of the loan officers I'm going to interview next week, a fellow named Greg Bush, who's now VP at Bank of America and did about $150 million last year. We were chatting. They had a processor, and she was so overwhelmed, and it just couldn't handle all the volume. And sure enough, into this fold came a guy. I can't remember his name. He was a funny fellow. Came in, and within a very short time, literally, he was walking down blocks, knocking on down doors. I'll never forget him. Knocking on doors and bringing in like a loan every third house on a refi. It was really an amazing thing. This is way back, maybe in the 70s. And but what would happen is that he had never developed a relationship with this processor. And where this other fellow, Greg Bush, and another, they would wine and dine him. They couldn't be more polite. They helped out. And he would just come in and throw another four on her desk and give her the look, and off he'd go and come in with another four and give her the look, and that was it. And what happened is that one day the market turned, and all these loans in there had quotes that were going to expire. The market had taken a monstrous spike. And he walked in one day, and she gave him the look. I know this because someone else was there. I wouldn't even know the end to the story. And basically, in so many words that I certainly can't repeat a polite medium here, let him know that she had not gotten to loan one, and that she wasn't sure when she was going to be able to do it. And I've forgotten in terms of real dollars how much money he had on the table, but I can tell you this, that within a very short period of time, he mentally became almost unhinged and got out of the business. I mean, this was a man who had counted his money before he spent it, had easily had $100,000 sitting in those boxes, and I believe 2 or 3 of these things settled out of the whole thing because he did not take the time to treat this processor, who was a wonderful woman, had children, worked enormous hours, weekends, wouldn't give her the time of day. It was just come and dump. And that cost him in over $100,000 in $70s. So
it's a lot.
Yeah, but to get back, I think there is a lesson here in the relationships with people, and I say this for new loan officers that are out there that don't take the time to ingratiate themselves with processors and to really understand. A lot of them have young children. A lot of them live on the edge financially, and it's hard, and it will come back to you many times over if you treat these people right.
The other thing is, I don't know everything, and I'll call them if I have a question.
Good point.
You know the answer to this, and I think, they feel, well, why, I'm calling them. Why didn't I just call, I don't know, our ops manager? Or why didn't I call somebody, that might have been at the same level? Because they probably know the answer and I didn't, and they could educate me that way. So just always having that equilibrium, that you're equals, I think is very important. And it's not just processors, underwriters, and loan officers. I think, as you can agree, that's probably with any facet of your life.
Right, exactly. How about how do you manage your time? Do any particular tricks? I mean, it's always hectic in this business certainly for the type of level of loan officer I interview. But so how do you manage your time?
Well, I don't know if I really have any set way that I do it. It's just the night before I leave, I get things ready. I know what I have to deal with the next day. Everything is there in a pile, ready and waiting for me, knowing that I'm still going to have a little surprises show up.
So the old pile theory.
Pardon?
The pile theory.
Exactly. That's what they taught me in college, the pile theory. That's just the 80-20 rule. But I just get things ready and just make sure that you're, always organized. I have it's like a thing that you put your files in, so I know exactly what needs immediate attention, what are things that I can expect calls on, but just being organized is a simple thing. I'm not telling anybody new. Personally, my life has changed in the past few years because I had a child. So now I'm trying to balance work and family life, and that has been a real challenge. Because before I was free to make an appointment on Friday night, Saturday morning, Sunday afternoon, whatever it might have been. But now I have this small child to think of as well. And business is very important, but you can never substitute anything for the time with your child either. So
how do you do it? I'm glad you said that, because we're running out of time shortly. But I would like to talk about that, and I say that because there are a lot of young mothers out in this, but a lot of older mothers today, people having children later in life, that are trying that balance out there. And so how do you handle it?
Well, for the people that you're working with, the realtors, they're in the same situation. They have families, or maybe their grandparents, or maybe they have young children too. So they are, certainly apathetic to that. But what I have tried to do is just as much as I can possibly accomplish during the day hours, and try and I have evening hours during the week. But what I try to do now is Saturday and Sunday are definitely reserved 100% for my son. Unless it's a dire emergency. I just try to squeeze as much as I can between Monday and Friday, but I'm still available all throughout the weekend. I mean, my pager goes off all morning Saturday. I'm happy to sit there and talk with somebody on the phone, but I try to make my presence with my son for at least those 2 days, give him that. But, if it means not having somebody come to my office and having to travel 20 miles to go to theirs and take an application during the week, I'd rather do that than sacrifice, any of my weekend time. You know what
I call that? I call that also, for those listeners out there, being able to control the situation.
Right.
You cannot it's a hard lesson learned for people. You cannot let that client control you to the 10th degree.
Right.
When they say, well, I can only do it at 11 in the evening. Now, there are times when that's all they can. But more often than not, if you have some control, don't roll over. There is a professional way to work it out so that it can fit in with what your stated goals are.
Right. And just turn it around and say, well, I'd like to accommodate your schedule too. Maybe you wouldn't like to meet at that time, but maybe I could meet you on your lunch hour and come to your office and save you the drive time.
Right, exactly.
They might appreciate that more.
Right.
That you bring that up. So try to turn it around and make it positive.
And always give them an alternative so they're not backed into a corner.
Right. And
not just say, well, I can't make it at that time. Always give them a face-saving alternative so they don't feel that they're in the box and they retorted, well, that is the only time, lady, I can make it.
Right, because they'll hang up and call the next one.
Exactly.
Right.
Do you is your child old enough where you're dealing with sitters?
Actually, he's 2 years old.
That's going to be the last part of our interview.
No, he's 2 years old. And I've had the luxury of somebody that has come to my home to watch him. And now that he's turned 2, I was concerned about his social skills and learning to share and being involved with other children. So he has gone into a small school program for 2 days a week.
There's just a new study that came out. This is not a professional ending to an interview, but there's a new study that just came out within the last 2 days, I think, in JAMA, the Journal of American Medical Association, on the development of the brain in adolescence. And they have thought for a long period of time, it's been kind of standard de rigueur practice, that the brain stops developing at around 5 or 6.
Right.
And so the thing is, you get as much in. Now they're finding out that there's a part in the brain of children up to about 11 or 12 that undergoes significant growth that they have only recently learned about, really, within the last 6 months or so. So, developing that, getting that development, it's not over at 5 or 6.
No, it's so amazing watching a child grow up.
Well, I'm going to end on that happy note for all the mothers out there that have young kids. We'll call this a niche interview.
Can coexist.
And but I want to thank you, Julie, very much for the time. It was informative. We covered a couple different subjects that are not normally covered, and that's okay too. We don't want to always have the same thing. But it was well done, and I want to thank you very much for your time.
Oh, likewise, John. It was a pleasure talking to you, and I really had a lot of fun.
Okay.